Okay, class, good day. Yeah, thank you. Again, welcome sa ating course. So, this will be our part 5 ng ating discussion on chapter 2, which is Consolidated Financial Statements as of the date of acquisition. Ayan. Thank you again kay Sir Antonio Dayag of RESA, the Licensure Examination Review Center. Okay, and thank you, Sir Dayang, for this very wonderful presentation. He is also our reference author for this course. Ayan. Again, sir, thank you. Okay, guys. So, ayun nga, previously we have discussed the consolidation as of the uh, balance sheet, acquisition date. Okay, so we have prepared a consolidated balance sheet as of acquisition date using the full goodwill approach and the partial goodwill approach using the um, work papers. Okay, right. Yeah. So for this recording, for this part, we will be discussing same the consolidated balance sheet as of the acquisition date, uh, taking into account bargain purchase gain. Okay? So previously we have discussed on how to go about if we have a positive excess or we have a goodwill. So without further ado, so let's continue. Let's take illustration the 2-8 sa ating book, which is for a while I'll just see. Ayan, illustration 2-8 is in page 147 ng ating reference book. Right. Ayan. So, Parade Company issued 100 shares of its one par common stock for 80% interest in SCUD Company. So, si Parade Company is our acquirer. Okay, ang ating acquirer is SCUD Company, which will be our subsidiary. Right. Yeah. So, the fair value of Parade Company stock is 25 pesos. Okay? SCUD Company had been uh, plagued by many troubles, including a lawsuit from a competitor for patent infringement. Wow, this is big based on practical uh, scenarios. Yan. In view of the uncertainty of the outcome of the lawsuit and its impact on the future viability of SCUD Company, the existing owners of SCUD Company was willing to sell the company at a discount to its net fair value. So the fair value of the identifiable net asset, non-controlling interest, and consideration transferred were reassessed and deemed to be reliably determined. Fair value of the non-controlling interest as of the acquisition date was 75,000. Okay? So the separate balance sheets of the two companies immediately prepared before the consolidation with the acquirees fair value were presented as follows. So, ang ating acquirer, ito yung balance sheet niya, separate. So, ang total asset natin is 1,151,000. Then, for SCUD Company, ang ating subsidiary, we have a total asset of 295,000 and a total liability of 135,000. Right? Right. So, yung fair value ng SCUD Company would show a total asset of 505,000 and a total liability of 140,000. Right? Yeah. So for our computation, yan. So partial goodwill approach yung ating gagamitin. So that is a proportionate basis. So the resulting ownership situation can be viewed in the schedule of determination and allocation of excess. So we have used this format from the beginning of our discussion. Okay. So schedule of determination of allocation and allocation of excess. So as of date of acquisition. So yung ating consideration transferred would be 250,000. That is 10,000 shares of our parent company times its fair value of 25 pesos per share. Okay? Then the book value of at our subsidiary, yung book value ng kanyang shareholders equity, that would be 128,000. Ayan. So kung titignan natin, yun yung kanyang uh, common stocks. Wait lang, ito. Then the paid in capital in excess of par and the earnings of 60,000. In total, we have 160,000 na book value ng ating subsidiary shareholders equity. Okay? Then, nasaan na yung book value natin? Ito. Then, we multiply it dun sa interest ng ating parent, which is 80%. So, our book value of the shareholders equity ng ating subsidiary is 128,000 at 80%. Right? So, yung ating allocated excess would be 122,000 less yung um, difference ng ating fair value over the book value ng ating subsidiary times the 80% interest ng ating parent, our over or undervaluation of assets and liabilities would total to 164,000. So ito yung computation natin. So yung inventory natin at book value would be 50,000. Compared to fair value, we have an increase of 5,000. So sa ating asset, we have an increase of 30,000 sa land, increase of 125,000 sa ating building, and increase of 50,000 sa ating copyright. However, we have a net increase of 5,000 sa ating estimated liability for contingencies. Okay? So, ang ating total over and under valuation would be 205,000. Getting the 80% of that would be 164,000. Tama ba? 80%. Check. I-check ko yan. So, 164,000. I mean, sorry. 205,000 times 8%. 164,000. Tama. Okay? So, ang ating goodwill, sorry. So, ito yung ating allocated excess na 122,000. Then, yung changes in fair value would be 164,000. We have a negative excess or a bargain purchase gain of 42,000. Okay? To controlling interest or attributable to parents only. Right? Right. Yeah. Then, the entry to record the stock acquisition. So, ito na yung ating tatlong entries, di ba? Or, tama ba? yung, yung, oo, yung eliminate, ay yung, what do you call this? Dun sa ating steps. Okay? So, for this one, yung transfer ng ating acquisition ay ng ating consideration and the setting up of our investment account dun sa book ni parent. So, debit investment in SCAD company which is 250,000 and credit yung ating consideration transferred, which is yung ating stocks. Okay? So 10,000 for 10,000 stocks at par value of 1 peso. Then the excess of 240,000 in paid in capital in excess of par. Okay? So this is on the acquisition date. Then we record the eliminating entries. Okay? So the schedule of determination and allocation of cess provide completely guidance for the worksheet eliminating entries on January 2024 or 2014, whatever the date of acquisition. The eliminating entries consists of two. Yung first entry natin eliminates the book value, okay, ng ating stockholders equity sa ating subsidiary. Okay? So our entry would be debit common stock, stud company 10,000, and debit additional paid in capital, and debit retained earnings. So kung titignan nyo yung book value ng ating shares. Right, right? Right. So ito siya. For our first eliminating entry is to close our shareholders equity. Right? Then credit yung ating investment in SCAD company, which is 80% uh, ng ating shareholders equity. Then the remaining 20% to the non-controlling interest account. Right, right? Yeah. Then another entry would be the balance in the investment account attributable to allocated excess. So that must be assigned to other subsidiary accounts in the consolidation. Excuse me. So the allocated excess represents the total amount of additional net upward valuation that must be made in the subsidiary's net asset upon consolidation. For the purpose of convenience and illustration, the allocation is made on a second entry. Okay, so actually pwede nyo itong gawin as a one compound entry. Okay, but for our discussion and for further assessment, we will not use a compound entry. Okay, so if the problem is silent, we will have a two sets of entries. Right, right, right. So to record yung ating um, over under valuation ng ating assets and liabilities. First is debit inventory, increase of 5,000, land debit increase of 30,000, building increase of 125,000, and copyright increase of 50,000. However, we have an increase in the contingent liability of 5,000. Okay, so debit 5,000. Then credit yung ating, okay, yan, credit yung ating um, remainder ng ating investment account, or yung 80%, right, nung ating, tama ba? Yan, 80% ng ating changes dun sa valuation. Right, right? Yan. Then, credit yung non-controlling interest, which is 41,000. That is 20% ng ating, ito kasi siya, right? Right, right? Yan. Wait lang guys. Okay. So, yung 122,000 pala, yan, dahil nga mas malaki yung ating valuation versus dun sa allocated excess natin, we have a bargain purchase gain, right? Yan. So hindi equal yung remainder ng ating investment account dun sa 80% ng ating, okay, yung 80% ng ating over under valuation, right? Kasi yung 80% is 164,000. So yung difference is a bargain purchase gain. Nagets yan? Nagets nyo yan. Ayan. So, continue. Ayan. So, ito yung changes nga dun sa ating valuation. Then, credit yung remainder ng ating investment account, and credit yung 20% ng over or under valuation that will be allocated sa ating non-controlling interest. Then, credit retained earnings for the bargain purchase gain. Okay, so close to retained earnings since only balance sheet are being examined. Right? Right. So, kung meron tayong mga P&L items na that will be discussed on a later chapter, this will be another P&L uh, item. Okay? Yan. So, ito yung ating second entry. Right, right, right? Right. So, kung titignan natin yung ating worksheet using the worksheet method, ito yung balance sheet ni parent company. Okay? Then, balance sheet ni, prior to elimination, balance sheet ni subsidiary. Then, ito na yung entries natin. Right? Yan. So, eliminate investment against stockholders' equity of SCAD. That is the first entry. The second entry, eliminate investment against allocated excess. So, for this one, di ba nga, meron kasi tayong issuance ng common shares, common stock, right? Ayan. Then, for the par valued, ito yung first entry natin kanina. Nagets na? Ayan siya. Nasaan na siya? Ito. Yung ating balance sheet date kanina, yung balance sheet date tuloy. Yung ating balance sheet kanina, ayan. Di ba meron tayong 36,000 na common stock. Then, at the date of acquisition, we issued an additional of 10,000. Right, right? Right. So, dito sa ating balance sheet, may additional 10,000 on common stock. Tapos, dun sa ating paid in capital in excess of par, we have an additional of 240,000. Right? Yeah. Okay. Yeah. So, this will be our consolidated balance sheet items. We will have a total asset of 1,656,000. Right, right? Yeah. Ayan. So, the non-controlling interest. So, notice the following features of the work papers. So, incidentally, the non-controlling interest on the date of acquisition is computed as follows. Ayan. So, yung ating paid in capital, ito yung book value ng ating shareholders equity ng subsidiary, right? Right. Then, yung adjustment sa ating fair value, ito yung ating total fair value ng ating equity times the net interest ng ating non-controlling interest percentage. Our non-controlling interest would be 73,000. So take note that in compliance with the entity theory, the consolidated retained earnings is equivalent to retained earnings of the parent company plus bargain purchase gain on the date of acquisition. Right? So kung samin ulit natin yung balance sheet natin, yung total non-controlling interest natin would be 73,000. Right, right? Okay. So, ayun nga, let's proceed. Ito na yung magiging consolidated balance sheet natin at as of acquisition date. Yes. So, sa ating full goodwill approach naman, okay, so magkakaroon ng uh, consideration, I mean, i-consider natin yung portion ng ating non-controlling interest. So, the resulting ownership situation can be viewed in the schedule of determination on the allocation of excess as follows. So, schedule of determination. So, ang ating fair value ng consideration transferred is ito, di ba? Yung ating consideration transferred. Right? Then, allocated sa ating NCI would be 75,000 computed as, excuse me po, ayan, computed as yung 250,000 divided by 80% times 0.20. Tama ba? I-check ko yan. So, 250 divided by 0.80 times 0.20. Mali. How come? Paano nangyari? Wait lang. Okay, sorry, given pala yung ating fair value ng ating NCI. Right? Ayan. So, yung fair value ng ating common stock, which is 250,000 plus the fair value ng ating uh, non-controlling interest of 75,000. Given, that is given. Yeah. So, the fair value of the non-controlling interest as of acquisition date is 75,000. Right? So, dito sa ating computation, our total fair value is 325,000. That is the consideration transferred. Less the book value, which is 165,000 as a whole. Okay, I mean 160,000. Then our allocated excess would be 165,000. Right? Then for our changes, I mean valuation ng asset and liabilities, we have 205,000. Our negative excess or bargain purchase gain would be 40,000. So negative excess, bargain purchase gain to controlling interest attributable to parent only. Okay? So walang share si non-controlling interest dyan. Right? So our entry to record our investment, same entry, investment in stud company of 250,000, credit common stock of 10,000 and paid in capital in excess of par amounting to 240,000. Then our first elimination entry would be the same. Okay? Right? Right? So kung titignan natin yung elimination entry natin kanina, our first and second elimination entry would be the same. Tama? Yeah. Tama ba? Tama. Then our third elimination entry Dun sa first portion, the same then, right? But then, we will have a difference dun sa ating non-controlling interest portion. Ayan. So, sa ating non-controlling interest, sabi dito, non-controlling interest, yung 75,000 na fair value less the um, 32,000, which is the fair book value. Okay? Yung book value niya. Right? Nagagets nyo? Nagagets. Yan. So, yung 75,000, that is the uh, fair value. Okay? Then, yung 32,000, that is the book value ng ating non-controlling interest. Right? So, yung difference nila, which is to eliminate yung fair value difference over undervaluation ng ating non-controlling interest is 43,000. Tama? Yes. Ayan. Then, our bargain purchase gain of 40,000. Okay? Gets? So, dun sa ating worksheet, di ba ito yung ating balance sheet prior to the acquisition. Then, we have the eliminating entry. Okay? So, kung titignan natin, the non-controlling interest amount will be equal to the fair value, which is given. Okay? Ayan. So, kung titignan natin dun sa allocated excess kasi natin, ang basis natin in the computation is the fair value amount ng ating NCI. Right, right? Right. So, dun sa ating consolidated uh, FS, siyempre, total asset would be the same. But, dun sa ating non-controlling interest, we will have an amount of 75,000 as compared dun sa una natin kanina na 73,000. Then, we will have also a difference dun sa ating retained earnings amount, which is 523,000 dun sa nauna. Nasaan na yan? Ayan. But for this one, we will have 521,000. Okay? Gets? Right, right. Ayan. So, yung ating gain kanina is 42,000, while dun sa second, we will have only gain of 40,000. Okay? Because we considered the 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 what you call this, the fair value of our non-controlling interest of 75,000. Right, right? Right. Yeah. Sana na-gets nyo. But if you have question on that, please don't hesitate to message me sa ating LMS group chat or ating Facebook Messenger group chat, and I will be very responsive. Right, right? Okay. So moving forward, ito na yung ating consolidated balance sheet as of January 2024, 2014, whatever. Right? Yan. So that is um, uh, preparing the consolidated statement if we have a bargain purchase gain. Okay? So subsidiaries, treasury stock, what are these? So subsidiary treasury stock, wait lang, nasaan na tayo? Uy, guys, what's happening? Ayan. So, subsidiary may hold some of its own shares as a treasury stock at the time the parent company acquires its interest. Recall that treasury stock is a contra equity account which has a debit balance on the books of the subsidiary. The computation of the percentage interest acquired as well as the total equity acquired is based on shares outstanding and should therefore exclude treasury shares. So take note of that when computing sa ating percentage ng interest. Right? Yeah. So we will have more application of this as we go on sa ating chapter. Yeah. So reverse acquisition, takeovers. A reverse acquisition occurs when an enterprise obtains ownership of the shares of another enterprise, but as part of the transaction, issues enough voting shares as consideration that control of the combined enterprise passes to the shareholders of the acquired enterprise. Although legally, the enterprise that issues the shares is regarded as the parent or continuing enterprise, the enterprise whose former shareholders now control the combined enterprise is treated as the acquirer for reporting purposes. Also, take note of these scenarios. As a result, the issuing enterprise, so the legal parent, is deemed to be the acquiree, and the company being acquired uh, in appearance, the legal subsidiary, is deemed to have acquired control of the assets and business of the issuing enterprise. So the legal parent is effectively the acquiree, while the legal subsidiary is effectively the acquirer. Although the legal parent is the entity that issues shares to acquire the legal subsidiary. A reverse acquisition is often initiated by legal subsidiary. So, ito yung mga scenarios na kailangan nating i-take note. Okay? So, kapag may um, reverse acquisition. So, we will, I hope we will have um, more examples on this. So, illustration 2-9, that this is under page 149. So the balance sheet of RR Company and Double T. Double T company on the date of a reverse acquisition business combination are shown below. Yan. So, current asset is, ayan. So, ito yung total book value ni RR Company. Then, we have the fair value. Then, Double T Company. So, an examination of the shares held by two shareholders groups in the following manner clearly indicates that Double T is identified as the acquirer. So, paano nangyari yon? Yung shareholders ni RR Company, ayan, which consists of 320 shares, is owned by um, is 40% owned by Double T Company, right? Then yung shareholders ni Double T Company, which is uh, 480 shares, is 60% owned. Wait lang, tama ba? Si yung 320 shares, tama? Ni RR Company is owned by Double T Company of at 40%. Okay? Then yung 192 shares ni Double T Company is owned by Double R Company at 60%. Tama ba? Nalito ako. Anyway, so yung, ayan, so yung fair value of net asset is 60, book value of net asset is 280,000. Book value 720,000. Then fair value of stock is 30,000. So the consideration transferred is 380 800 ay 3 million ay 3 million tuloy 3,840. So 128. Okay. Wait lang. Nalito tayo doon. For a while, guys. Wait lang. Wait lang guys ha. Nalito na si sir.